Hi, Marvin Barth of Thematic Markets and Seriously Marvin. I'm here with my good friend Chris Tyrer, who's president of Bullish, a leading institutional crypto exchange. And why are we here in London, Chris?
Well, it's the Goldman Sachs Digital Asset Conference tomorrow, so we thought we would host a private event for clients, and who better to come and give them insight on the intersection of crypto and macro but my good friend Marvin.
Well, and what did we decide to talk about? Because this actually came out of a conversation you and I had over coffee. I was randomly having this crazy thought about how stablecoins are actually this old economic idea of narrow banking. And I
Yeah.
was telling you about that, and your immediate response was,
Yeah, the burning question I have is as we increasingly see stablecoins integrate into the global payments network and system, I mean, now we're at $250 billion in AUM.
amazing,
The transaction throughput is off the charts.
35 trillion, I think.
35 trillion, year to date. And so it's becoming increasingly relevant. Boston Consulting Group put out a great stat that they forecast there'll be 3 trillion in AUM by 2030. So this is becoming relevant at the macro level. Now, the one thing that strikes me is that these are fully funded assets. And what that does is that is then competition for deposits at banks. So what does this do for the credit creation function that banks have today, and how does that impact global markets?
And that is exactly the question where it relates to narrow banking. I published a piece this morning that was actually picked up by CoinDesk, a bullish
That's
asset,
right.
on what this means in a general big picture sense about how this is related to narrow banking. And tomorrow I'll be publishing at Thematic Markets what the market implications are and what happens to credit creation. So if you're not able to come to our meeting today, you can find about it there. Thank you,
Perfect.
Chris.